Hello and welcome to the second edition of our Year-in Mutual Fund Cafe. In our first edition, we spoke with four of the top fund managers of the Indian mutual fund industry. Sunil Singhania of Reliance, S. Naren of ICICI Prudential Mutual Fund, Navneet Munot of SBI Mutual Fund and Prashant Jain of HDFC Mutual Fund about whether they will stick with large caps or whether they will move to mid caps. Will 2016 also be a year of mid caps? We continue our conversation with them in the second edition. Well, I was trying to desist from asking about banks, but Prashant, when we speak of disruption, they seem to be the biggest casualties. Payment banks, small banks are all going to chip away, nibble away, probably the current and savings account pool. Will you still bet big on banks or only stick with the most powerful?
I think I would not entirely agree with what you said, because whatever these banks do, I think the established players are capable of doing it. So if they don't end up changing, if they don't end up delivering the same services, certainly those individual players would lose market shares. But I think an existing bank has lots of customers. The way I engage with them, the way I service them is changing. So I have to adapt to that new way. If I don't, I will fail. But I think the inherent competitive advantages of these banks are very large. I mean, the day some of these mobile wallet companies stop giving you cash back, then why would you use them? You could use the mobile wallet of your existing bank itself. So yes, there is a difference in the way you engage with the customer, you service. But I think those who change, they should actually do quite well, and they can actually bring down the cost of doing business very substantially.
So you would bet with the big banks? Which part of the finance sector would you like?
I think the entire financial services in India, I mean, the way the ratio of financial savings in India has to go up, the savings rate has to continuously go up as our income levels go. So I think the entire space looks very exciting.
What about you, Navneet? I mean, I'm asking you because now the Reserve Bank is also talking about permitting the digital marketplace to give loans as well. So probably you will have the Snapdeals and the Flipkarts tying up with NBFCs. All this chips away business, or doesn't it?
Of course it chips. I think we have discussed it before that the way several businesses have got Ubered or Netflixed or Airbnb, same is likely to happen to financial services. While there is tremendous underpenetration, there is going to be an exponential growth in overall financial services. But I think that pie is going to be probably get shared by a larger number of players, and that's why the people who are investing in right technology and cutting edge technology, who got the capital, who got the capability to deal with this new environment, which is very different. When you think of a bank branch, you think of an office where a couple of people are sitting with a teller. In future, when you think of a bank branch, you'll take out your mobile phone. That's the future of banking.
I guess to some extent the legacy banks are also your mutual fund guys' curse, because if it is 30% of the index, you can't perhaps escape them all the time. Sunil, which part of finance?
No, so I would agree.
And finance at all?
No, I would agree in bits and pieces. I think you can't have the economy progress without the financial services. Having said that, when you talk about financial services now, it would be a much bigger canvas. It would not only be the traditional banks. I would agree with Naren that, if our view is that money is going to, or savings are going to move towards more financial assets, then asset management companies and life insurance companies, wealth managers would become big. And if you actually see, there is still some advantage with the traditional banks because of regulations and because also of the trust factor. So I might borrow from anyone, but when it comes to placing money, the brand becomes very important. So banks which are regarded as safe, customer focused, they would obviously have an upper hand. Technology is going to be important not only in the banking services but in all the services, whether it is retail or anywhere. We can't get away with it. But the basket of financial services would be much more than only banks. So as and when you get an opportunity to maybe participate in an asset management company which is listed, or a life insurance company which is listed, or a wealth manager which is listed, or maybe some payment bank which comes and gets listed. So I think the percentage weightage of banks in the overall financial services segment might start to come off, but financial services as a segment will continue to be as important.
Oh, so quite clearly the non-bank financial services, the entire gamut will be of interest to you. Okay, I'll take a break on that note, but thereafter I'm going to ask my fund managers what is their big sector bet or sectors bet for 2016 and thereafter. Back in a minute.